Hello, everybody, and welcome to today's webinar. I'm glad you turned up. It's, as I mentioned in the emails, it's half an hour. I'll look at, what's happening in the markets, just cover off on a few main topics, and then we'll obviously dive into the popular Q&A, and this is where you can ask me questions, and I'll look up the charts live. So the way this will work is with these particular webinars, for those that haven't attended before, there's a Q&A box, question and answer box, so you could type anything in there, and that's when we can start handling the questions later. If there's something happening technology-wise that you need to let me know, again, just throw it in the Q&A box. I'll be keeping an eye on that. But yeah, let's get right into it. And just very quickly before we get stuck into it, for those that are not familiar with us, who are we? What do we do? Well, look, our main business is in portfolio management. So this is where, for those who have $500,000 portfolio, we help you manage it. We only charge on the brokerage. You get your own HIN, your bank account, login. We're a small business. You deal directly with myself and my portfolio manager, Gordon. Whether it's a self-managed super fund, you're an individual, a company, or a trust, you could use cash, you could use existing shares. But if you are interested, let's start with a free portfolio review. I've got a little email from one of our long-term clients just a week ago. Alan, obviously, is quite happy so far this financial year. We're up about 17% compared to the 8% in the market. But look, for all of those that don't fall into that category, we do have the research, the dynamic investor. So if you're not familiar with that, have a look on the website and you can have a free trial. All right, but let's get stuck into it. So the first thing I think is worth looking at, and we've looked at this previously, is the US ISM PMI. I've got a typo there. It's not the PM, it's the PMI. So this gives us a really good indication as to how the US market, the US economy is tracking. Anything under 50 means contraction. Anything above 50 is expansion. Yes, the ISM PMIs have come in, under 50 for at least the past year. But what I've circled there on the right-hand side is the fact that it has pretty much bottomed out. We're not getting this huge bounce back like we've seen in previous crisis situations like COVID. But it looks like it's bottoming out and it's starting to head higher. Why is this important? Well, we've done some work on what the share market does when the PMI is at certain levels and heading in certain directions. So the main thing that I want to highlight on this slide is in the table at the top, phase 1. So it says when ISM PMI is less than 50 and rising, which is where we are now, you'll see that the S&P 500 averages returns of about 23% of the year, and the ASX 200, 22%. So yes, it's less than 50, but you get the best returns when it's from those lower levels and rising. And obviously the market doesn't do well when it's already above 50 and it's starting to fall. And then of course, when it's continuing to fall, levels under 50. So, this is essentially this is a table that we've shown before, but it's still applicable, given where what we're seeing with the ISM PMI. Bond yields are obviously very interesting. We've expected yields to start coming down. We have seen obviously a bounce when the US Fed started lowering rates, but they do seem to be rolling over again. So these are the 2-year bond yields in the US. The 10 years look pretty similar. Essentially, you've got this sort of banging around over the past couple of years. But from what I've seen, especially in the past couple of days, it does look like yields are heading lower. And this is important because it's basically a tailwind for the share market. So again, just looking at the S&P 500, given that it's the major major market there, and we do follow their lead. Doesn't look negative at all. I know we had that drop with all the concerns over DeepSeek, but still trending. What I've circled there at the top right-hand side is, when the market made a new high, and it did so pretty quickly from those lows in January, since then it's essentially just cooled off and consolidated. So we're not seeing, big sell-offs here. To me, it just looks like it's, continuing to trend higher. So looks so far so good with the, with the S&P 500. And after a couple of years of solid returns, as we've just shown with our sort of PMI analysis, we could be set for another really good year on the US market. The US dollar, as we could see on this chart, so this is a weekly chart, and I've drawn a couple of blue lines showing the range that it's been in since around mid-2023. We did look at the US dollar sort of around September last year, expecting that it should start to hit a bit of resistance and fall down. It didn't do that, so that's something that that went against what we thought it would do. It actually powered ahead after the Trump election. We can see that it broke above that blue line. But now it does seem to be falling back, and it is back at a support level. So interesting to see what happens here with the US dollar. And the reason why I say that is, the US dollar is normally treated as a safe haven asset. So when the US dollar is falling back, we see movement into sort of riskier assets. Obviously, the Australian share market is viewed as such with all the resource stocks. A falling US dollar is positive for commodities, positive for gold. So very interesting to see what it does from here. I'm missing the chart of the ASX 200, but if it was in there, essentially the market's trending higher. So look, I'll pull that up later when the slides are over, but our market's still trending higher. Obviously pretty solid today. Day today, I don't really see any warning signs yet on the broader market. If we sort of go into, I guess, just a couple of sectors, the two major sectors in our market are the materials. We've got the materials index and the financials index. When we last had our webinar in September, I was talking about, the potential sort of big recovery in materials. It happened very briefly, but of course they've all just cooled off again. So we haven't had any follow through, but we can see that, the materials index, obviously this includes BHP, Fortescue, Rio, etc., still holding above the September lows. Obviously, while other sectors are still firing, we're not seeing a big flow of money into the materials sector, but it does look like they're starting to get a move on. So, I mean, according to this index, we're possibly seeing a bit of a breakout. If you were to look at a Fortescue chart, it looked pretty similar to this. So, the cooling off from the start of October, might be ending now, and that would time perfectly with, obviously, if the US dollar does finally come back, we'll see a decent rally in the materials index. Oil, so oil's something that a lot of people are interested in. Does look like it's breaking that downtrend. So the far right hand side, we could see that movement above the diagonal line. Not going anywhere in a hurry, but it is looking like it's putting it low. So we might see oil move sideways a bit. There's still concern that growth isn't picking up, as we could see with those US PMIs earlier on. They're not above 50 yet, but they're heading the right way. US reserves, the strategic reserve has been depleted, and that's getting refilled under Donald Trump. So, that could provide further demand for oil. So, one to keep an eye on. Gold, obviously we've been we've been bullish gold the past year, especially ever since it had that breakout above that blue line, and it's still trending really well. Obviously, in the short term, it's made up quite a bit of ground. This is a weekly chart. So in the past 5 or 6 weeks, we've had a movement from $2,600 US, and now it's approaching 2,900. So yeah, maybe a little bit stretched in the short term, but you know, there is a very clear trend. It's still very strong. We may see another consolidation. So, you know, ultimately my view is gold should continue to head higher for a while. Short term, you can't be chasing it. You'd wait for the next consolidation. And we could see on this chart that there's been 2, you know, major consolidation periods since that breakout nearly a year ago, sort of around May and June. And then there was another one end of last year, and each of those lasted several weeks. So you could be patient, but I think gold still needs to be one to keep an eye on. Obviously, financials index. Yeah, this time last year, everybody was saying that banks were overvalued and you should sell them. But all of our charting work suggests that no, they're going to head higher. And look, they're still trending. Don't discount further upside in the banks. And I'll show you a couple of charts of CBA and Westpac. And to be honest, I put these charts in the slides this morning before they continued to power ahead. But CBA, I look at this chart, and to me, this just looks bullish. It's consolidating. And by the close today, it actually edged to a new high. So if this is going to stick, CBA could power ahead. It could easily put on another $10. Obviously, they're reporting soon, but it's a good-looking chart, and you'll be seeing, you know, more, you know, articles on grumpy fund managers in the next few days in the paper, wondering why these banks are going up and why their shorts aren't working. You know, stick with the trend. They make up such a big part of the market that the market's not going to go up when, you know, the banks are going down. So if the market's going up, you're an index fund, you're a fund manager, you don't want to underperform, you'll be buying the banks. You just have to do it. And look, that's probably a lot of what we're seeing. But yeah, at the end of the day, they're going up, and you know, you're making money if you're long. And Westpac, very similar. It's we could see it sort of consolidating. This is another one that we picked up recently, and it looks like today it's breaking out. So, you know, I think these banks are going to have further to run, the way I see it at this point in time. So just in terms of some stuff that I've picked up recently, that I think still looks good. So these are just some little clips from the Dynamic Investor Report. So ResMed, so look, this is a few weeks or so ago. It has made a bit of a breakout, and then it's come back in the past few days to basically retest this breakout zone. So I think that still looks like a really good buy right here. Pinnacle also had a breakout a few days ago. Well, sorry, a bit longer than that. It was sort of at least several days ago now. But they had their results 2 days ago. Profits looking great. So we've had a little bit of weakness today because it jumped up a lot yesterday, but very strong trend. I think that still looks really good. Couple of more stocks. Codan. So this is one that we've look, we did pick this one up for clients, well, at least several weeks ago, a few months ago. It looked like it was breaking out, but it sort of went back into the range. This is our most recent Dynamic Investor commentary on it, which was start of February, basically talking about how it's traded sideways for such a long period of time that when you get a breakout, should do really well. Well, it broke out today, actually. So have a look at Codan tomorrow, CDA. Basically, today's breakout is it looks like a really good buy signal. Pro Medicus, the one that, again, all the value investors love to hate. We're looking at a breakout here at the end of December for a new buy signal, and And that's pretty much again, that's happened over the past several days. It's traded sideways for a couple of days now, so I think that's still an opportunity. It hasn't got too far, so that's another one to look at. All right, so we'll get to the Q&A, but again, just very quickly, if you're interested in the portfolio management side of things, let me know. Otherwise, if you're not getting the Dynamic Investor and you should be getting it, then hit the website or just email or call me tomorrow if you need help with that. All right, so we'll move on to the Q&A. So what we'll do there is we'll pull up the chart. So this is the chart of the ASX 200, as I mentioned earlier. As we could see, still trending higher. So we've already got a few questions lined up in the Q&A box, so feel free to throw your question in and we'll start looking at some live charts for the next 15 minutes. So the first one, Min, buy or sell? Look, it's I don't think it's a sell. So this is a daily chart of Min. I know I'm just looking very short term, but very interestingly here, it is leveling out. It's trading sideways. It's sitting above the September low. So what that is telling me is that, we've probably found a low. So I don't think it's worth selling necessarily unless you have a better opportunity to buy it. Look, it's not moving yet. So it's one of those stocks that, I think when the resource stocks will wake up and do really well, maybe at the expense of some other sectors coming off. But with global growth heading higher, US dollar looking to come back, you'll see these move, whether you buy it or not, whether you can handle just having dead money for a while. But I think it's most likely found a bit of a low. Okay, next one's on Beach. So we have looked at this one previously in our reports. We have the breakout here, done really well. Now it's fallen on quite a bit of volume. So I'd be treating that as a sell. I think if you've got a trailing stop, you'd be either looking at, some of these recent lows, or if you were running a really tight, I'm guessing if you ran something like a 10-day moving average, you'd be hugging that and then it's gapped under. So that looks negative. I'd be out of that. Deep yellow, looking really good. So you've got obviously some, it looks like it's found its low. We've got a situation here where it eased back, gave us a little false break and ripped higher and sort of ripping higher again, big volume, tightening up here. So I think we're a day or two away of seeing another rally. Nick Scarley. So look, the overall trend for this one still to the upside. I mean, it is very, very volatile. The key point to realize, so this is a weekly chart, it is getting very close to that recent high. So I'll switch back to the daily. You treat it as a hold, it's trending, but I think there's a risk buying it here because it might just need to consolidate a bit further before it can push above that high. But overall, it still looks good. Next question is on the gold price. Yes, I've already dealt with that one. De Grey. Oops. Still trending. I believe they're getting taken over. Look, it's not one I follow, but looks like it's nothing wrong with the way that's trading. That's pretty straightforward. Got a question on US stocks. Sorry, I don't have this particular software isn't for US stocks, so we could take that one offline. But the next one, apart from that, is Horizon. So we actually did some analysis on this one in our Dynamic Investor report just a couple of days ago. Look, it's still downtrending. Let's zoom out. Still heading lower. at best they head sideways for a while, but it's not, yeah, it's not the type of chart that would interest me. Okay, question on the S&P 500. Is it like a double top or a triple top? We'll just go back to that chart. Look, I mean, what you'll get is when stocks make a new high, they'll pull back at some stage, then they go up again. When they get close to that old high, it could look like a double top. And a lot of people say, oh, it's a double top. Be careful. I mean, you could have said that's a double top. You could have said that's a double top. There's nothing here telling me this is necessarily a double top. I think if it came up here and then was sold down sharply, that would look negative. But the fact that it's holding in, to me, looks pretty positive. Got a question on potentially top 3 sectors. Look, I think if the whole market's going up, most sectors will do well. Obviously, resources, they're not moving yet, but I think they'll come good. I think, obviously, technology should still continue to do well for now. Financials, potentially what you need to maybe stay away from is, I guess, just defensives. And I've been saying this for over a year now, when we've been bullish on the market, that when money is finding opportunities in the market, it's not going to go into defensives, which became very expensive in 2022, because that's where people were hiding their money. So whether it's Woolworths or Telstra and those sorts of things, and we are seeing those kind of stocks underperform. So I think if you stick with cyclicals, stocks that will benefit from falling interest rates, I think you can do well. The next one is Elders. Look, these things are very volatile, and look at that chart. So this is a weekly chart. Get rid of that line. Yeah, nothing really enticing about this. I think with these ag stocks, maybe if it gets all the way down here and everybody hates it again, then that's your contrarian play. But yeah, not looking great at the moment. Okay, next one we have BWH. So obviously we've got a stock here. I think that, yeah, it's trending lower. So look, I guess you could see from this weekly chart, there's been an uptrend, but now it's obviously downtrending here. If I move to the daily, we could see it's just making the lower lows and the lower highs. Potentially what's interesting is this here. So we could see it got dumped, bounced a bit off the lows, massive volume, but then it didn't get any worse. So yeah, sort of snapped back the next week, amid trading sideways. So potentially that's a low that's in place. There's not enough for me to get too excited. It's not, it's not trending higher again, but I guess you could say this is one to keep watch on. But it could be going sideways for a while yet. Drone Shield, yeah, it looks like something to stay away. So classic case of when the stock goes parabolic, it often ends by doing the opposite on the way down. So that's what we got, the daily chart. Yeah, it just doesn't. Nothing here is getting me excited that it's found a low. And Appen, still trending, getting quite volatile now, but I like the way it's reversed here. So it got close to this low and then reversed pretty sharply. So this one does look like it wants to head higher. Capricorn Metals. So this is one that we've looked at previously in the Dynamic Investor Report. Yeah, just a big uptrend. We had this sort of tightening range here and that breakout sort of through $5 and now it's up to $8. So obviously, you know, maybe looking a bit overextended. Just keeps edging higher. So again, you can't be buying it up at $8. You have to wait for another one of these consolidations. But overall, it looks really good. Adairs. So get rid of some of those old lines. Let's start with a weekly chart. What's it telling us? Not much. Downtrend. What do we got here? We've got a bit of a recovery. You know, potentially it's building up under a big resistance level. So you know, maybe an upside break from there. You could, potentially this is an inverse head and shoulders. So yeah, look, maybe one to keep an eye on. It might be getting ready for an upside move. What have we got next? Zip. So I covered that I did a video this morning for your stock request. So it's on the way down, unfortunately. Very nice trend, broke the stop, and it's sliding. So I wouldn't go near that at the moment. Perpetually downtrending. Yeah, look at that. That's a weekly chart. Let's zoom out. When was the high? Oh, keep going. 2007. All right, so anyone who wants to tell you that it's time in the market, not timing the market, well, you don't want to be in perpetual. And these guys should know what they're doing. Yeah, look, big downtrend. If they couldn't make money in good times, yeah, just stay away from that one. Hello World. Get rid of these old lines. Yeah, look, very sideways. What do we got here? So the peak in 2014, sell off, tried to rally, sell off, it's trying to rally. Let's look at a daily chart. Yeah, it's too early for me to become confident that this is a bottoming process. Endeavour, again, downtrend. Nothing too interesting on that one. So I'm just going to quickly try to fly through these. I might go over time by 5 minutes to squeeze in a few more questions. There's a lot there. Breville, uptrend, looking good. What I'm seeing is, sharp rally, little consolidation, sharp rally, little consolidation. Looks like it wants to head higher. BHP, similar to that materials chart we looked at earlier. Big spike up, easing back. I think it's bottomed, but we just need to see evidence that it's turning higher again. ANZ, yeah, it does seem to be missing the uptrend in the other banks. This again shows why you shouldn't. A lot of people out there are holding all 4 banks. You don't need to. Just ANZ's not performing. That should be in CBA or something else. That is, it's trying to head higher. I think it'll head higher with the market, but yeah, it's not a powerful uptrend. Alkane Resources. So this is the weekly chart. Big downtrend, getting close to this high. So getting close to resistance. Just be careful about that. Brain chip. So it looks like it's trying to bottom out. You're getting these rallies on volume, easing back. Yeah, obviously very volatile. I mean, where's your stop here? It's quite a distance away. Bit of resistance here. I mean, the weekly chart, I'll just go back to it. Possibly you could say, well, needs to get above here. it might just base build for a long time and you'd just be having your money tied up in something that's not going anywhere. I've been asked about next G. This is a weekly chart. So nice V shape. Now it's consolidating. So it might need to sort of, if it is bouncing now, bounce back up here, do a bit of sideways. And then if it can break above that line, then you'd get a sustained move. AMP looking really good, sort of on in the short term. This is a daily chart, really nice trend. I think we've looked at this one in the Dynamic Investor as well. You've got breakouts along the way. Nice little consolidation here, sitting on top of that high. Yeah, short term looks good. Obviously, I'll go to a monthly chart. Big capital destroyer, but look for the short term. I like the trend. Quarry, these lines. So what it's been doing now is, we've got, it's back in the range. There's been a bit of a range here, sort of broke out. It's come back into it, but it seems to be finding support at that gap. So if it gets back above here, then you treat that as a buying opportunity. If it's consolidated, then it's just a case of once it's back in the uptrend, you'll get a fairly sustained move after that. Next one, DUR. Don't know this one. Okay, so this looks similar to that other stock that we just looked at a moment ago, the NXE, where there was that V shape. And I said it might need to just, do a little bounce here and sideways. This is what this stock's now doing. So sort of V shape. Obviously, it's hit that resistance level, come back, hasn't pulled back too much, and now it's just consolidating alongside. So if this was rounded, you'd say it's a cup and handle. Basically, you're looking at a breakout above that line, and then you can get a pretty decent move. All right, we'll just do a few more. MFG. So there's one I was looking at recently. It looked like it was trying to break out of a base, but it's fallen back in the past few days. So it is looking a bit ugly there. So probably one to just stay away from for the time being. That's not the kind of volatility you want to see. Telstra, just going nowhere. Go to the weekly chart. A lot of resistance around this level. It's hanging under it. If it can break that line, maybe it runs to 440. So maybe you get 10% upside, but it's, I mean, it could just end up back at 380. So I wouldn't be buying a breakout here just to make a small return. I think there's other options. NXT. Look, it does seem to be sort of rolling over here. It's one that we've traded before and we got out sometime last year. I can't remember where. Somewhere in here. I don't know. Is that a sort of like a head and shoulders type topping pattern and it's broken and tried to rally and fallen under? Just still a bit messy. I can't get excited about that one. Woodside, so similar to that oil chart, it looks like it's bottoming out. It's not going anywhere in a hurry. So you've got, that was the low. It's made a higher low. Sorry, a higher high. Just still very, you've got this kind of sine curve happening. I think it's leveling out, but again, just not doing anything too interesting. VOEs, this is the short squeeze. 20% of this stock is sold short. Slowly started to cover off around here. So I think if you're getting a short covering in a stock like this, it's got a hell of a lot higher to go. If it's already rallying while the shorts were adding shorts, then once they start covering their shorts, you'd be seeing it all the way back up here. So look, I still like that uranium sector. Definitely one to keep an eye on. I think they've all bottomed out anyway. So yeah, looks really good. All right, just a couple more and we'll wrap it up. Pointera, obviously breakouts, come back. Yeah, I mean, probably will head higher, but to me, it looks dangerous. Do you buy it here, have a stop there? Might get resistance there. Bit tricky. Telex is one that we're holding for clients. We did have it in the dynamic investor, I think, as recently as around here, but yeah, still trending, still happy to hold. We've got a trailing stop following under it. So as long as it's doing that, it's all good. Aristocrat, it's another one that we like at the moment. Again, it's just consolidating. Does look like it wants to head higher. All right, we might have to wrap it up there because I've gone a bit over time. So look, sorry if I couldn't get to your question. Email it through for your stock request. And hopefully we get around to it. But yeah, if you need anything else from us, please contact me, whether it's management, the Dynamic Investor Report. But thank you for turning up. I'll post this, the webinar, I'll post the recording up on the website in the next couple of days and you can catch up with it then. Thank you and good night.